Hi, Josh Brettel here with another look back at what the heck just happened last week. And we are coming to the end of September. I recently had the privilege of seeing one of my favorite bands from my childhood, Green Day, play live for the first time. One of their most popular songs is one that came back many years ago called Wake Me Up When September Ends. And September is usually our market's worst month, but this year was not so much the case. What's going on? What does that mean for you? And also, what are we looking at in the months ahead? We're going to talk about that here in the next few seconds. Markets last week were calm. Volatility was relatively low. Stocks are still holding near all-time highs. We got some inflation numbers that came out, pretty much staying constant around that 3%. We actually did have GDP numbers increase quite substantially based on the revisions that came out. So that was positive news for the economy. Now back to what the market really liked last week. The Federal Reserve cut interest rates by 0.25% for the first time, as we've been talking about for many weeks now. But more than that, they also indicated that we should expect an additional 2 interest rate cuts before the end of the year. The market has now priced that in, and they are looking forward to that. Things could go, what does the future look like? Things could go well, things could go poor. We don't necessarily know. On the optimistic side, inflation tends to be trending lower. We'll see what comes of the earnings reports, everything coming out, but we tend to see things going positive there. On the negative side, we have the tariffs, we have the possibility of inflation, and we also have what's happening on the world stage. Looking ahead, October does bring some bumps, but the outlook for the year end is still relatively positive. People seem to be surprised by September's strong performance, but now we go into October looking at what's coming there. As with any decision, now is not a time to make knee-jerk reactions in or out. If you're seeing all the good and you say, hey, I've got some extra money, I want to jump into it, let's make sure we're making good, rational decisions. The same as if you're really nervous, you want to pull out, let's make sure we're making good, rational decisions. This coming week is important. We have all sorts of things going on. We've got all sorts of employment data coming out that is going to have a key indicator of what the economy does. If the employment data is too good, we may worry about the Fed not lowering rates. If it's too bad, we may worry about a recession coming in. So we're kind of looking for a Goldilocks employment data there. Also, the biggest news you're going to hear this week is everything to do with the government shutdown. Expect to hear a lot more from us on the government shutdown. Long story short, this is a short-term problem. It's not a good problem, but it's a short-term problem, and it shouldn't impact your long-term plans. So with that, I look forward to seeing you next week.